Bitcoin's macro chart has flashed a specific bullish signal for the first time since 2016. In today's video, we're going to be diving deep into Bitcoin's price action, discussing not only why we believe the top is not yet in, but of course, the short-term price action and what to expect next. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Today's video is going to be an incredibly detailed one, and by the end of the video, you have a detailed understanding of not only what is happening from an economic perspective, a macro perspective, but a short-term perspective as well. We're going to be diving deep into the macro charts, going over why the top is likely not in, and a couple major bullish signals that have just flashed for the first time since 2016. On the short term, we're going to be discussing the current price range, the fact that we are still in an overall uptrend, and what we are looking out for continuations upwards and downwards. And we'll be going over the recent economic data, the Federal Reserve, Jerome Powell's speech, and the upcoming inflation data. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining us over on VIP, we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our news, our video, our help, and our trade setup chat. If you are interested in getting access to all of that, contact me in the pinned comment of the free channel for more information. Let's get into a video. So starting on that market data, how are we looking for the 24-hour period? 24-hour volume is down 30.7%, sitting at 165 billion. Overall, still very high. 24-hour liquidations down 49%, sitting at 233 million. Again, overall, relatively high, but down quite a considerable amount from yesterday's massive volatility. Of the 24-hour liquidations, 150 million have come from long positions and 82 million have come from short positions. Taking a very preliminary look at the recent price action, we can see that Bitcoin is still in this short-term downtrend established at the 1st of April 2024, a couple days ago. You can see in the last 24 hours, we are more or less consolidating sideways, chopping between a range of 67,000 US dollars and our low at 65.5 to 65.2 thousand. So a lot of volatility in the short term in this short-term chops range. Again, liquidating both longs and shorts. We'll come back and discuss in massive detail what has happened here in just a moment. Moving over to the broader markets, taking a look at the DXY. The DXY is playing out exactly as we expected. Like we said in our prior videos, we were expecting a continuation upwards from this breakout into that 105 region, and we said in yesterday's video that we expected a rejection from here. The most likely direction was a rejection back down to our 2 or 3 week long uptrend. If we do lose this uptrend, we will be expecting this continuation downward to resume towards these local low points. And if we lose these local lows, we're looking at our yearly low point. If we do break above this neckline of resistance, the DXY will flip bullish for the first time since November 2023, and we'll be expecting a continuation upwards to 106. Overall, right now, short term is bearish, expecting a continuation lower. Moving over to the broader markets, again on the weekly charts are still looking very good, with 1 day and 22 hours remaining until close. They are red for this week, suffering a bit of a short-term correction as we have seen across most risk asset markets, but overall, if we're zooming out to the macro, the trend is very established and very strong. And like we said in the prior video, one candle does not define the trend. At worst, one candle can be a warning sign for reversal, but in this instance, it is not even that. It is simply just a healthy pullback. If we do see pullbacks, we could see pullbacks to 5,100, potentially even 5,000, and these would still be considered healthy on the macros. Only if we lose that 5,000 level would we be entering a high time frame downtrend to retest that 4,800 region. Until then, expecting macro continuations upwards after these healthy corrections pass. Moving over to the Dow Jones, exactly the same layout over here, guys. So again, one candle doesn't define the trend. At worst, it is a warning sign. For day and 22 hours remaining on this candle, provided we can remain above 39,000, every single correction above there should be considered healthy. If we do lose 39,000, we could see an extended correction to 38, and this is going to be our high time frame area of support. A loss of 38 sends us into a high time frame downtrend back to retest the 2021 all-time high. And again, provided we remain above these levels, we should be expecting the macro trajectory of price action to continue upwards over the broader scale of a larger time frame. So that being said, guys, let's go ahead and jump over to the economic data really quickly and then jump into Bitcoin. So in the last 24 hours, we have had the Jerome Powell, so the Federal Reserve speech. This was in regards to upcoming interest rates, the economy as a whole, and there were some key points that I want to mention taken away from that meeting. Specifically, number one, the current narrative, which is that interest rates will be reducing in the future, is still intact. And this is the most important thing. The narrative that is driving perceived systematic risk down over a period of time, which is pushing asset prices up, the narrative that has been intact since the start of 2023. Remember, in this period here, the narrative was developing for interest rates to start pause. Okay, when interest rates start to pause, the likelihood of future interest rate reductions increase. So the narrative that was interest rates will reduce in the future, dropping perceived systematic risk, increasing risk appetite of investors, driving money into risk assets, and pushing the price action upwards. That same narrative that has facilitated the growth of Bitcoin over the last year and a half is still intact. We still expect interest rates to drop at some point during this year. Now, that is a good thing. However, there is actually also a bad thing with that. With that announcement, there was an additional announcement, and the additional announcement is that inflation has risen a little bit higher than expected recently, and Jerome Powell is keeping an eye on that, and as a consequence of that, we could only see the interest rate cuts occur in Q4, and we may only see one interest rate cut as opposed to 3. So provided that the narrative is intact, which is we're going to see interest rate cuts, it is likely that the result of this will only cause short-term turbulence and not a shift in the macro expectation for risk assets. However, if we do see inflation continue upwards, we do have inflation data coming out in a couple days on the 10th, this could strengthen or bolster the argument that interest rates may not drop at all and we could see corrections in the market. However, until that is officially announced, until that narrative is set, it is wise to assume that is the unlikely scenario and the current narrative will hold its course, which is what we believe to be the case. So that being said, let's go ahead, guys, and jump over to Bitcoin. A lot to discuss. A quick word from Bitget and BingX before we do. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump over to Bitcoin. So starting on a very pressing matter, and that is when the market's correct, when we see these pullbacks, people get very emotional. People start panicking. People start wondering, well, is this the top? Is the bull run over? Are we topping? Are we going to a bear market? The simple answer is we have to look at the data. We have to look at what we have seen historically. We have to look at what is happening in the economy, and we have to formulate all that together, run a contextual analysis, and come to a logical outcome. And the logical outcome is, at the moment, the traditional top signals we look for are not present in the charts. In fact, it is quite the opposite. Everything is still suggestive that we are in an aggressive bull market, and we are likely going to continue upwards over the course of many, many months, or however long it's going to be. So let's take a look at this chart over here. Looking at this primarily, we look at the Gaussian channel. So the first indicator we're looking at is the Gaussian channel. This is on a 2-week chart. The Gaussian channel has done something it has never done before. Well, it's done one time before in 2016. And that is the channel flipping from red to green. You can see the last time we did this was back in 2016, and we've officially done this again. Now, a lot of people are probably thinking, what the hell does that even mean, MegaWhale? So I'm going to explain really quickly what the Gaussian channel is, how we define strength, weakness from it, and how we use it to trade, and then we'll understand what this means. So when we're looking at the Gaussian channel, we are looking at a few things. We're looking at color shifts, and we are looking at break-ins and breakouts of the channel. To give you an example, a break into the channel from the top side down is indicative of a bearish reversal. A break into the channel from the bottom side up is indicative of a bullish reversal. A break out of the channel from the bottom side through is indicative of a continuation in the uptrend. And just as like that, when we break below the channel, going through the channel, it is indicative of a bearish continuation. When we look at the color will confirm the fact of whether or not we are in a strong trend or we are in a weak trend. So when we see this color shift, it is actually confirming the fact we are now in this strong uptrend. Now, the last time we saw that was all the way back in 2016, and so far 2016 is sharing a whole heap of similarities with the current cycle. It's a very, very bullish indicator. It's a very interesting thing we are paying attention to. But let's draw it back now and take a look at why the top is likely not in according to our macro technical indicators. We're taking a look at a few indicators specifically. We're taking a look at the Ichimoku cloud baseline, okay, and we're taking a look at the Gaussian channel. So historically, when we have seen the top generally occurs when the price action drops back below the Ichimoku cloud baseline. And again, it doesn't predict the exact day of the top, but it tells us if this occurs, the top has been in for Bitcoin, and we'll see that continuation lower. So historically, what we have seen is the price action travels along, it breaks through the Ichimoku cloud baseline, which is the red line. We continue above the Ichimoku cloud baseline the entire time, only then we break below it and we enter a bear market. We enter that downtrend. Okay, we remain in the downtrend until we eventually break back above the Ichimoku cloud baseline. We go into a bull market. We remain in the bull market until we break back below it and enter that bear market. So are we entering a bear market? According to our technical data, we are not entering a bear market. According to the technical data, the trend is still strong. The trend is expected to continue. So from a macro technical perspective, the markets are still looking very, very strong. And there is nothing as of right now that is indicative of a macro reversal. If we look for macro reversals again on the weekly, we can look at that Gaussian channel. We can tell you when we've see these breaks back into the Gaussian channel after the fact that we have broken down from that baseline on Ichimoku cloud, that is a double confluence of a bearish reversal and continuation into a bear market. We can see it over here, we have double confluence, and we can see it over here, we have double confluence. Again, double confluence means we have the 2 points of validation. We only had 1 point here, we didn't have the second point, and therefore we did not enter that bear market. In this instance, with the breakdown of the Gaussian channel, and we had the breakdown of the Ichimoku cloud baseline, entering an official bear market. In this instance, you can see just how far away the price action is from both the baseline of the Ichimoku cloud and that Gaussian channel. So even if we were to see a correction downwards, it would be considered a healthy correction. This is what it brings back to any correction we see that maintains the price over 48,000 is likely going to be a healthy high time frame correction that would not destroy the overall macro trajectory of Bitcoin in terms of the 4-year cycle traditional bull market. We could see a strong correction downwards, but it is still wise to realize that even if we do see a strong correction downwards, that wouldn't indicate the end of the bull market. It would just be a healthy high time frame correction, similar to what we have seen in historical bull markets. It is normal to see corrections. It is normal to see pullbacks. It is what matters is that the overall trajectory of price action is still pointing upwards. So that then brings us to another point. If we're looking outside of just technicals, we can look at our economic data. So drawing away from just the fact that charts are looking good technically, we can look at things like this. And most specifically, we look at these indicators. We look at interest rates, we look at inflation, taxation policy, economic policy, governmental policy, societal perspective. All of these different macro drivers of price action facilitate bull runs. Remember, buyers and sellers determine price direction, but what determines buyers and sellers to aggressively buy over a period of time? It is these factors right here on the chart. So when we start to see the narratives behind what drives buyers and sellers to make their decisions shift bearish, only then will we start to see a bearish reaction in the market. The charts are just a visual representation of the sentiment of buyers and sellers over a period of time. So when we're looking at the direction of macro price action, it is important we understand the correlationship, okay, between economic drivers and triggers of perceived systematic risk and actual risk in the market. And we've done a whole extensive analysis on this. Again, I've got a background in economics, so I've got into this in very large amount of detail. We're not going to do it today, it takes way too long, but it's important to understand that when we're looking at macro direction, we're looking for tops, we're looking for bottoms, we're not just looking at the price action, we're looking at what's behind the scene, what is moving the price action from behind the scene. So let's go ahead and now jump into Bitcoin on the short-term chart. So zooming out, there is a lot going on. I want to talk about this pattern over here. I've been seeing this pattern pop up on the chart. A lot of people talk about it. So I want to go ahead and put my 2 cents in. At the moment, we can see this is indicative of some sort of bullish pennant formation. It's a bullish pennant formation because a bullish pennant is a pennant of which we enter from the bottom side up. So any sort of structural consolidation, any sort of neutral pattern, when you have a neutral consolidation, meaning you have equal trend lines, whether it be an equal uptrend and equal downtrend or equal parallel trend lines, if you enter that consolidation from the bottom side up, the likely direction is a continuation from the bottom side up. Now, it is not the guaranteed correction. Nothing is trading as guaranteed. It is just the probable direction based on historical price data. So if we take a look at the current pattern and exclude those speculative directional decisions or whatever, we can see that the current trend is reflected of a pennant at the moment. We have got our low, we have got our high, this formula is 0.1, 0.2. We have got a higher low, okay, 0.3. We've got a lower high, 0.4. And we have got our higher low, 0.5. So we have our 5 points. We've got 3 on one side, 2 on the other side. If you know how we validate patterns, you would know, according to my theory, that is how we validate the patterns via 5-point rule at least, the minimum. So we do have a valid pattern over here. If we take a look at this pattern, again, it is a neutral pattern. So we can see break upward and we can see a break downwards. If we look at a break upwards, of course, we are going to need to break above this neckline or this downtrending diagonal resistance. If we want to see a break downwards, of course, we need to break below this diagonal resistance. A break above this diagonal resistance will likely result in a continuation to retest that 74K region, which is the 2024 all-time high. But not only the 2024 all-time high, it is a bullish trigger for a macro continuation upward, right? If we see that break above that level, we see a macro continuation upwards. Furthermore, if we break toward the downside, we are expecting a continuation to 60,000. And if we break 60,000, deleting this higher low, we will see a macro continuation downwards. So let's talk about that really quickly and then dive into the short term in much more detail. Let's discuss those 2 points. So number one, if we do see a breakdown of 60,000 at any point, that would be incredibly bearish, as at the moment we are in a uptrend, and furthermore we have a strong base of horizontal support, which is a short term and a macro support. This 60k support is of course going to be this major area of support which we retested numerous times. A loss of this level will result in the price action entering a lower historical resistance range, an area of which we see increased volatility. If we break down from this level, we have bearish momentum. We will see increased bearish momentum and volatility toward the downside, resulting in a flash correction to potentially 58,000 or even as low as 52,000. So you can see how significant that 60k region is, provided we are able to remain above this level and create equal lows or higher lows. The overall trajectory should still be upwards for Bitcoin. But that doesn't mean anything for the short term. We can see short-term volatility, we can see short-term fluctuations, and we'll get to that in a second, but it's important to note that while we remain above this level, regardless of what happens from a broader perspective, we are still going to have strength. It is only if we lose that level, then we start to see weakness develop on the higher time frame, which could cause higher time frame corrections. So now we'll zoom out one more time and talk about that upward move. If we want to see the break of 74k and we want to see the break upwards, we need to break this RSI trend line. We've been talking about this trend line for quite some time now. This RSI trend line is representative of the momentum, okay, in the price range since the breakout of 60,000. We have been falling in momentum. We have got negative momentum. It is normal to have negative momentum after a large surge of volatility, okay, and then moving into compression. If you think about momentum, okay, it averages out. We get a massive surge of volatility, and then we get volatility dropping into compression. It is normal that we start to see momentum reduce. So momentum reducing is not bearish, provided we have bullish absorption. So let's take a look at that. Do we have absorption? We do have absorption. We have got lows on the RSI, okay? We have got lower lows on the RSI. You can see this is a lower low over here. Okay, this is a higher low. And with the price action, we've got higher lows and higher lows. This means that we have rising price action, falling momentum. This is indicative of absorption. So it does tell us that the bulls on the higher time frame, although on the short term they're getting demolished, right? On the higher time frame, they do still have a degree of control here. There are still buyers stepping in, trying to push the price action upwards. So now let's dive into the short-term charts before we end up the video, because this is where a lot of people are watching and a lot of people are thinking about. But before we do, actually, let's talk about this trend line. Actually, let's go to a short term. We'll come back to that trend line. So let's go to a short term over here and discuss what is happening. So this is our short term range over here. Ignore the RSI for a second. This is going to be our short term range. We can see the VRPV on the right. We can see this downtrend is reflective of the last 4-day downtrend. This is the downtrend we have been traveling in. And you can see this is going to be our major area of support between 65.8, okay, 65.8 and 65.2. This is a major area, a zone of support over here. Again, the last area of support before we break down from the pennant and move to 60,000. So a very important area of support. Okay, looking at the current price action, we have got a short-term neckline of resistance. We've retested it twice now. The short-term area of neckline of resistance, again, we have constants of the 50 EMA. As we discussed in yesterday's video, we can see we do have decreased volatility. We are seeing bullish absorption, and we are seeing bearish exhaustion, as we can see the volatility is reducing over time as we are, again, expanding and compressing from the 50 moving average. That is telling us that the bulls are trying their best to regain control in the short term and push the price action upwards. However, they have not had any luck yet, as the price action is still in the downtrend and underneath a horizontal neckline of resistance. And thus, for the price action to continue upwards, we are going to need to see a break of 3 points. Again, trend, structure, strength. Remember, trend, structure, strength. Trend, we need to see a breakdown of the downtrend. Structure, we need to see a break of the neckline of resistance. And strength, we need a break over the 50 EMA. When we get those three things, that would tell us that the bulls have regained control and they are likely going to push the price upwards. They will fill the VRPV gap and we will see the price push to the $69,000 region again. So the bullish short-term scenario is that we establish a reversal, validating those 3 points. We will see a continuation to 69,000. That would be the best case scenario. For the bearish scenario, like we mentioned, we would need to break below this local low point. We discussed this in yesterday's video. If we go back to a smaller time frame, in yesterday's video, we were talking back over here. We were discussing as the price action was developing. We told you that we had this horizontal range developing up over here, and we would need to break down of this range. You can see this range has established that local range low now, that higher low. Again, for us to flip bearish on the short term and continue the trend downwards, we would need to break below that low point, and as a consequence, break below the uptrend of that pennant formation, resulting in a continuation lower. That is it, guys. That is a short term. I hope you enjoyed today's video. If you've got any questions, leave them down below, and we'll catch you guys in the next video tomorrow, going over the short term and the macro from a different perspective. Thank you, and I'll see you then. Cheers.